Okay, so let me just start. Firstly, just so you heads up, this is our new website. It was launched today through good, strong work by our IT department and the like, and Phil Eagleton, who's our head of somewhere around here. He tries to hide, but he's our Chief Technical Officer, has brought to us today, and it's fantastic. It's been launched straight away today. So feel free after, you can go and see that. It's on marketlend.com.au. So really, just to give you a little bit of idea where we started, 2014 we launched, December 10th, 2014 actually, and then what we have always been committed to do is actually deliver the connection between the investor and the SME. So the big focus for us is to try and get better pricing all the time for the SME, and at the same time get the investor a good strong return. And that's where we've been focused. I like to call this the Adams family. We've got one coming up soon that's going to change. So, you know, we do these photos now and then, and as you can probably see, if you look back on the wall, you can see where it comes from. The vision's always been for us to actually try to give investors strong returns, but also give the SME the best value, and also work with referrers and introducers for that purpose. Just a bit of background as to who we are. So myself, I was ex-head of capital markets for debt and equity at UniCredit. Paul Roffey was also at Deutsche Bank. He was head of trust sales. And Jeff Kirkby, which is floating somewhere, I'm trying to find him there. Our chief head of risk was over at Euler Hermes for 6 years as chief head of risk, which is a subsidiary of Allianz. And Carl Luxman was over at American Express. We won't throw stones at him because of that, but he was over at American Express and he saw the light and joined us. Adrian Jenkins over at SVP Partners, liquidator of course, but then prior to that he was over at American Express as well. Seems to be a similar vein here. And Jane Lehman, who's our Chief Investment Officer over there, who was over Macquarie and Wells Fargo. As far as funding goes, we are equity funded. We do not carry any debt at the moment as a business, which makes us quite strong in that position. As far as the funding itself on the investor side, we have committed debt up to about 60 million. We have funded 65 million to date, and we continue to put on more lines and fund future transactions. We actually just closed a transaction with a limit of 5 mil this week. And actually we did the first invoice for that for 1.5 mil for a public company. So we are going from strength to strength. What you'll find is that we do use insurance significantly in our business. We've got Uta over there, who is our Chief Investment Officer. And I say not investment officer, sorry, insurance man, broker. His business is called Chief Insurance Broking. As you can see, he is the chief, and he does a lot of good work for us in making sure that our insurers toe the line and assist us in making sure we get the limits. Unfortunately, he can't do everything on our premiums, but he does his best. As far as backups, pardon? That's right. The backup servicer we have is Jardine Lloyd Thompson, which is now Marsh, and that's something that we also have in our structure. We do hold a full AFSL license. We have had audited accounts completed just recently on Tyndall Capital. We do get Deloitte audit our services and processing every year, and we also have Clifford Chance who reviewed all our documents. As you can see, we've been around now close to 5 years, although it's still a fair bit to go till then. Headcount's around 48 people. Not all of them are here. We do have a team of 14 people in Philippines as well, and then we have other people online and offline and developers as well. As you know where we are, and we don't have any bank funding. That's pretty important. If you're an introducer or referrer, we are not beholden to the bank's criteria, which gives us a lot more flexibility, especially post-global financial crisis, where the majority of the banks started to just control the way that any other funder dealt with them and stop them essentially funding. I've sort of gone through this, so I won't go too much again. The lines of credit that we funded, 65 mil, 78 mil turnover. And what that means is essentially for the insured side of our business, we've got essentially 30 up to 90-day lines. And so they are rolling every 30 and 90 days. So the turnover is a lot higher. I was a bit careful about that number because, with our insurance broker here, he may try and see if they can cover the premiums, because we get charged on turnover, not the actual lines. But fortunately, it is not as bad as we thought. The marketplace itself for us is actually run where investors have the right of say in the businesses that they invest. So they go in, they make bids, it runs an auction system, they turn around, there's a cap. It's very styled similar to what you would see in a capital markets position. And it's been styled in that way because that's a true and tried way of operating, and that's why we set it that way. It's automated, the loan application settlement. I can say with good authority that we can actually put a listing up and fund it and close it within 24 hours. And Daniel will testify to that. He was in my office 5 o'clock yesterday and asked for $200,000. And when were you funded $200,000? Earlier today, and was paid. And he's actually, clients on the other side or the suppliers were paid as well. So we can move that quickly when we need to. And it's through a lot of good work with our team in Philippines as well as our team here. We do have a secondary market, which is quite a strong feature on our platform, and I do encourage you to go to the website for that. It enables people to actually get out of a loan without affecting the underlying borrower, so they can actually buy and sell. And all of that is actually a proprietary risk model that is built around it. So we actually have a model that actually looks at the risk and runs through the systems for it. As far as the products themselves, we don't require any property collateral. This is a very strong point, obviously, because bank funding is generally driven on property collateral. We do take company and directors' guarantees. We do take security over the goods, and we do take an all-PAP. And for those who are not au fait what an all-PAP is, we do take security over the entire company. And that's part of the important part that we do to control the way we deal with our assets. We do have our liquidator here, or receiver, David Levi, who assists us when we get into strife, and he's probably very happy to see that we have those big, strong securities so he can walk in and take control of situations. The insurance policy itself, because we actually only advance 90% of the invoice, or we receive 10% within the first 30 days, it ensures that we have 100% cover with the insurance policy. As far as loans by sector, and I know this is a bit of a tricky chart, but I'll just run through it quickly. You would expect this, but the biggest market for us is manufacturing. Manufacturing is where we're essentially paying suppliers out of China, Italy, you name it. We've got clients that we've actually purchased solar, suntang cream called Solar D. We've had other clients that we've bought, I'm just trying to think of a few others. We've had clothing, so Nicholas the Label is one of our clients, so we buy clothing for them. And then, essentially they then supply to their end user. So there's a lot of that type of business that we're involved in. One of the other ones, which we'll talk about later, is the financial and insurance services, and the Money Spot boys will explain a little bit more of how we fund them and how we get into that market. And I'll bring you back and I'd encourage you to look at the website. That is an example of what the marketplace looks like, and essentially each of the listings is offered to the investor. They can go in, they can bid on it, they can actually put their amount, and then we close it on the auctions. An insured transaction generally takes about 24 hours to close. On the uninsureds, it can take between 10 to 14 days, depending on the risk profile. But the investor itself gets to see everything. So everything that we get, the investor gets to see and is able to bid on that. So as a referrer, and I know a lot of you may not be referrers and introducers, but for those who are, and even if you're not, you can still refer to us and we're happy to pay you commission. Generally, the client that we look for is someone who's having a problem with their cash flow. And I say problem, I don't want the guy who can't pay his cash flow and can't pay his bills. That's not the type of client. Well, we're looking for a client who essentially has, what we would say buyer's gone long, where he's given them 90 days credit, and at the same time he's only getting, say, 0 days credit from his supplier. So he's got a gap, he's got a 90-day gap, and that's where we can come in and fill that gap so that he's got the cash to buy more supplies, and then as a result of that, when his buyers come in, he's actually not in a position that he can't buy more stock. He has that ability to do so. We also want clients who are cost sensitive and security sensitive. So what we mean by that, we want good operators. The typical client for us is turning over between $500,000 to $20 million. Whilst we say that, like what we've just said, we did have a public company, and I think they're turning about 120 million, 140 million. So, for some of those, it does work as well. But, those are the type of clients that we would say are not banked well, and those are the clients that suit us very well. As far as funding, as we mentioned before, funding happens very quickly. So one of the things we do see, and we see it with all the time, someone goes to us, we approve them, they get funded, and the next thing you know, they're still waiting for the bank 4 months later to get their facilities. And you know, not to bag banks, banks do take time to do things, but the reality is a lot of our clients can't wait for those banks to come through. So that's where we fill the gap. We do have a very strong ability, and that's a lot to do with our insurers, to fund overseas debtors. Just for a comparison, if you look at, say, ScotPac or someone similar, the banks have restricted them to 30% offshore debtors, whereas we can do up to 100% of them. We won't advance 100%, but we can cover those type of debtors. We do offer an Evergreen Facility. It's actually a 12 months renewable, reviewable facility. So as a result of that, it means the facility is actually reviewed, but then they can have it again. So it is a facility that's quite attractive. It continues to go on. With the debtor finance and even the supply chain, we can reduce the collections costs because we take over that problem for them. And look, I won't go through this because that can come out and think, it's simply, not to bore everyone, it's a debtor finance type arrangement. We take up to 60 days. We come in, your typical terms there. Our facilities come in, we will actually pay you for your invoice on the due date, and then we will turn around and give you 60 days credit. So you'll be able to, the debtor will be paying us in a debtor finance. In the supply chain, which is probably a little bit more detailed than that. In a supply chain, we pay the supplier on the due date or prior to the due date. Then we give between 30, 60, 90 days credit. If it's typical product, they pay 10%. You pay 10% before, or your borrower pays 10%, and then or your client. And then what happens the last 90 days, they pay the 90%, giving them enough time to sell their goods and get their money in. And that's the whole concept, filling the gap. We have introduced a new payment gateway called Unlock, and that transaction really is what it is enabling a supplier to offer to their buyer 30, 60, 90 days. So I always like to call it a little bit like an afterpay B2B. The only difference is we deal with tools of trade, meaning that it's stuff that they're buying and then reselling. And so what we do with that, we have a portal and an access to that. What happens is the invoices get uploaded. We pay the invoices, then we bill the actual buyer. The buyer can choose between 30, 60, 90 days. And essentially the supplier either gives us a discount, which means it's free of charge to the buyer, or the buyer actually pays a premium. And as we found, Carl and I found with another client the other day, he said, look, can we pay the supplier now? Because he actually got a discount from the supplier by paying early, and that covered the cost of our facility. And that's a product that was launched in October last year. It's essentially a commoditization of our supply chain product. But the good news with that product is that it's very easy to use, and as a result of that, it's only driven on per invoice. So it does make a lot more flexibility for our clients in that they can come in and out on the facility itself. And for the suppliers are able to get more stock sold, so it works well for them, and if they're willing to give us a discount, they can offer it free of charge. And Carl and Adrian are involved, and Carl specifically is his main role to work on that space, and he goes out to suppliers and helps them out on board and get the customer. Process is quite easy. Typically, the client fills out the application, we run a risk assessment, it gets listed on the marketplace, investors bid, and then the money is paid to the supplier or paid for the invoices. So it's a very simple process. What happens for the investors, they get to see the full details, they get to see the financials, the other documents alike. They're under confidentiality, of course. If they breach it, they lose all their investment money. But what they do is they go through and then they can make a bid. So they can say, look, I bid for this at 12%, there's a cap, and then they put how much they want to bid for. And as a result of that, they get essentially a bid that's allocated to them. And what we do is we built an institutional grade type funding platform, which means that they get a note that's held by a trustee, and that trustee then ensures that we pay them the return at the right times.